Every business owner with a corporation that I talk to wants to minimize their taxes. The question I always get is, should I pay dividends or should I pay salary? And the answer is typically very complicated. So I'll give you a quick highlights of things that I would recommend to a business owner to consider before they make that decision with their accountant. So the first is that salary means that is an expense against your business. So your business pays less taxes, whereas dividend does not. It comes from your retained earnings. Now, there is a tax credit on the personal side, so it's roughly going to be about the same amount of taxes anyways. Salary also requires you to pay CPP both for the business, and for you personally. It's going to add almost 10% of your cost to it. But you get to contribute to the Canadian pension plan, which is indexed against inflation, and you get RRSP contribution room. You can use that in years you have big years of income to reduce your personal taxes. Whereas if you always do dividends, you're not going to have any contribution room to use. A lot of the banks will want to see consistent employment income when you go to get a mortgage. If you apply for a mortgage, they see dividend income. They view business ownership as high risk. They're not going to want to give you a mortgage, but if they see consistent 2-3 years of similar or small growth to your salary on your T4, they're going to be much more likely to give you a personal mortgage for a home or a loan, line of credit, etc. There's a lot more we could talk about with this. Every situation is different. It really depends on everyone's personal scenario, how much their business is doing, what their personal financial goals are. But now you've got a few highlights of if you had to make a choice.